Hi, this is Pat Node. I'm the president here with Thousand Oaks Insurance. First of all, I hope this finds you and your family doing well. This video is meant to address the astronomical increases we're seeing in insurance premiums here in California. So I'm going to give you some explanation and some reasons, but we would certainly like to talk to you one-on-one. I'm going to go through a list of the reasons why the rates are increasing, and many insurance companies are choosing to leave the state of California. Number one, inflation. The cost of labor and building materials have skyrocketed. Whether it's auto repair or home, it's increasingly difficult on the home side to find a good contractor. And when we do, the cost to repair an auto or rebuild a home, the building materials combined with the labor costs have gone up astronomically. Number two, the California Insurance Commissioner refused to approve rate increases over the past 2 or 3 years because of the pandemic. This year, in 2023, the rate increases that insurance companies have applied for are being approved for the most part, although there are still some that are pending. Number four, many companies have not received the rate increase approvals from the California Department of Insurance yet, so they have left California entirely. The leading home insurance company by market share in California is State Farm, and they just announced at the end of May 2023 they are no longer issuing property insurance in California. The number two carrier in California is Mercury Insurance, and luckily Mercury Insurance has not shut down and are still offering home insurance policies, but they're being very meticulous, as are all companies that are still left in California offering home or property insurance. If your home is older, 20 or 30 years or more, you will need to make sure that you have proof that you've maintained and updated your home. Typically, proof may be needed for things like roof, electrical, and plumbing in the way of photos, but increasingly paid receipts or building permits may be required. Unfortunately, this is not isolated just to property or homeowner policies. Many auto policies are increasing as well. And the reasons are not dissimilar to why home insurance or property insurance is increasing. During the pandemic, many people were not driving as much, and now that people have gone back to work, the frequency of claims on auto insurance has increased dramatically. Yet, the California Department of Insurance has only just recently approved rate increases. The good news is that we are an independent agency and we shop many companies to find you the best premium, but more importantly, in these times, we will make sure that your policy is already approved and your home location and other criteria have been met. There will be an inspection after all new homeowner policies are issued to make sure that your home is in an acceptable condition. Typical exterior inspections will include making sure no trees or shrubberies are overhanging your roof and that your electrical and roof look to be in good condition and there's no deferred maintenance on your home, things like paint and maintenance. As for auto insurance, in prior years, low annual mileage was being accepted due to the pandemic. However, now low mileage are being challenged, and at times you may be required to provide proof in the form of oil change or repair receipts from a repair facility showing the annual mileage for your particular vehicles. Many companies have also really pulled back on what home locations would be approved because of proximity to wildfire and brush. So be careful if you shop outside of our agency and you receive a quote, make sure that they before you cancel anything with us, that they've approved your location and it's gone through underwriting, because it's common to give out quotes, but they may not be approved when it goes to underwriting. So if you have a good California home property and homeowner and auto policy, we recommend that you do not cancel it. We do reshop these policies for you. The last resort for property insurance in California is the California Fair Plan. This is a bare bones policy and needs to be complemented by what's called a DIC, or difference in conditions policy. So in essence, if your home is canceled and there's no insurance company willing to accept it, we can place the property with the California Fair Plan and write a difference in conditions, or DIC, policy to complement or dovetail the coverages. Let me be clear, however, If you have an in-force preferred policy that is active and you're being offered a renewal, that is always going to be your best option, even with the higher rate. We're happy to talk to you about ways to mitigate your premium. So I certainly understand and sympathize, because the large increases you want to shop outside our agency, but please be aware of unscrupulous agents and online stores that will quote you a rate, but it may not qualify once it goes through underwriting, and especially home policies that making sure that they've approved your location, the age of your home, and any losses or claims. With regard to homeowner policies, we can certainly look at ways to mitigate your premium increase, such as increasing your deductible and making other coverage changes. However, by far, the best thing you can do to reduce your premium is to bundle your home and car insurance. Increasingly, companies are offering the best rate and terms when you're bundling your home and auto insurance together. We highly recommend that you do this, as well as increasing your deductibles and making other modifications to your existing policy that we can help you with. So, while I certainly understand your anger and frustration, believe me that we're doing everything we can, and we are a leading agency who will shop all the best carriers for you. We do appreciate your business, and we look forward to hearing from you with questions, or if you would like to take a look at changes to your policy, or more importantly, adding your auto to bundle with your home if that is not already the case. Thank you so much. We look forward to helping you through these difficult times.